The title of our talk today is the Emerging New Normal for Nonprofit Financial Management and Compliance. So if we just scroll down a bit, we'll talk about what key questions we're going to try and address today. I mean, we're all aware of the terrible events of 2020, and all of us have experienced them in different ways. Our organizations have experienced them in different ways. So the key questions that we're looking at for this session are, is there an emerging new normal for nonprofit financial management and compliance? Is it new? And are there opportunities as well as challenges in this new normal era? And in trying to answer these questions, we'll share what we believe to be the key features of the emerging changes, which could be happening now or in the future. And we're going to try and suggest ways to increase our awareness of things that we can do and how we can adapt our financial management practices. Thanks, Kathy. So the kind of things we're going to touch on today, I'm sure we could talk quite extensively about other things, but in our time slot available, firstly talking about key indicators that your organization can monitor to kind of have an awareness of crises that are coming up on the horizon. Also looking at the impact on income results and the heightened need for monitoring of the financial situation of our organizations. Then the sustainability reserves, which is actually always a good topic, but even more of an issue now. Then looking at this world of remote working and the effect that it has on maintaining accounting records and protecting the internal control environment and for fraud prevention. And we'll also look at compliance, what we perceive to be a heightened scrutiny by the South African Revenue Services. And then last but not least, the new compliance checklist for nonprofit companies that has arisen from CIPC in 2020. So let's get started with our first slide and also our first poll, please, Zoe. So I'll read it out for you while you briefly think about the answer. How do you think COVID-19 has affected and will affect the income of your organization? So yeah, the top result is that there are organizations that are experiencing less funding in terms of grants and donations, which is kind of what you would expect given the economic downturn. But there's a number of them, which also isn't surprising because we've seen this happen with a number of organizations too, is that there's more funding. And those would be especially the organizations that are working with the COVID-19 relief efforts. In fact, I mean, Food Forward is the classic example where they've like upscaled the entire operations and gone into 2 new provinces, all because now they've got this opportunity to through increased funding to distribute food to a greater extent. There's also some that have experienced no effect at all, which also isn't surprising because some organizations are able to just continue as normal. And I'm also not surprised that no one said they had more trading income, because clearly in our economic circumstances, that is one of the key challenges, is to be able to like run a business and generate a lot of extra income for your organization. But, you know, individuals and corporates out there have less money than before. Yeah, so thank you for that. We can go to the slide now. All right, so this slide is just talking about these 2 different effects on income that we've just discussed. And yeah, this is actually quite a hot topic in the sector. Whenever I speak to people, they're always saying, so what are your views on how the income of nonprofits will be impacted? And yeah, it's just actually so hard to say, like in the longer term, what's going to happen. Because even if you aren't affected now, somehow that economic downturn must affect funders who are earning income in some way, especially corporate funding, but also to some extent foundations who are investing their money. Investments may be yielding lower returns. So we can't actually tell for now. And of course, there's also the other aspect where funding that was previously directed to high priority issues is now directed towards the COVID-19 issues. And the pool of resources must be limited in some way. And a classic example was recently one of the organizations we know they were told they were going to get a significant amount of National Lotteries Commission money, and they would have got it, like over 3 million rand, but then there was an apology, but sorry, we've spent that money on the COVID-19 related causes. So no matter what the priority of your cause, the money that you would have got could have been directed elsewhere. But also, as we've seen from the poll results, there is also some organizations with increased funding, and it could just be maybe because of the exchange gains, because of the weakened rand, and because they are working in the COVID-19 relief efforts. And also because funders who have worked with organizations and have been supportive basically want to give organizations more money to direct their COVID-19 relief efforts. So those are some of the impacts. Kathy, if we move on to the next slide, we can talk further about this. Great. So given this climate of uncertainty and possibly decreasing funding and income, what kind of things should we be doing to have a heightened monitoring of our financial health and cash flow? And there's definitely a need for that, because although we could never have predicted the COVID-19 pandemic, there's certainly a whole bunch of crises that are going to happen in the future that are going to come up, which may be small or large. And we want to kind of know what the organization is doing and how it stands to be prepared for that. So the first thing, and this is not new, it's to use cash flow projections. So we often spend a lot of time reflecting on the past. We look back at our actual results against budgeted results. And that is important. It's about accountability, but we must also remember that we need to look forward into the future and to make sure that we do have sufficient cash to finance our operations. And this is also important to consider. What is important to consider here is that it should actually be at least a 12-month projection, a rolling projection. And I personally know it's hard to go beyond the end of your financial year if that's the cycle that you budget for. So it might be difficult to break out of that mindset of predicting income and expenditure for the next year, the next financial year, as well as your current financial year. But it is important to look at a rolling forecast of at least 12 months. All right, so then moving on to what I call the crisis weathering indicators. So some of the things that'll make the organization, or should make the organization feel strengthened, is if there's a diversity of income sources, and also if there's a high level of unrestricted funding. To me, unrestricted funding, it just fills my heart with joy. When I'm working on a fund analysis for a client and I'm trying to allocate expenditure in a line item, to be able just to put it under a particular unrestricted funder source is just heaven. So a high level of unrestricted funding really bodes well. Then the last thing here, which may be new to some, but it's something that we think is important to look at as an organization to help predict how the organization can cope with these future storms. And this is the survival ratio. So Kathy, I think if we go down to the next slide, we can talk about that.
Brenda, can I just stop you for a second, because there's actually a couple of good questions that I think we can answer quickly. The one is, how do you monitor cash flow when you submit grant applications and have no idea when the outcome will be, what the outcome will be? That's the first question. And the second question is, what is unrestricted funding?
Okay, so the unrestricted funding, that's probably the easiest question, is when there isn't, that the grant agreement isn't specific about exactly what you'd have to spend the money on. So it's just like, well, this is core funding, or it can, you can basically use the money for anything. But the opposite is restricted funding, where the funding is, per the grant agreement, directed towards a particular project or particular line items, very specific budget. That is the difference. The conditions are more stringent. And then the other question, the cash flow projections, when there's uncertainty as to whether you know whether you're going to get funding coming in or not, Yeah, I think you kind of have to work with different scenarios. Maybe in the cash flow projection income section, put things there that you're certain of, and then perhaps do another version where you put the other ones that are less certain. So maybe do different scenarios for your cash flow projection and see what the worst case is, the best case, and somewhere in between, and work with that. Hope that answers the question.
Yeah, I think it does. And one person here, Lawrence, I think from ZipZap, says, our funders have been very kind to let us use restricted funding for operational use. Therefore, we've been able to move to unrestricted funding. So that's a great feedback from thanks.
Yeah, thank you. I think that's one of the developments that has happened recently, is that some funders have changed their tactics somewhat to allow organizations to do that.
Yeah.
Okay. All right. Thank you.
Oh, just by the way, we will be sending the recording will be available to people afterwards on a share drive.
Okay. Oh, Kathleen, we put confirmed and unconfirmed funding in our cash flow projections.
Very nice.
All right. So you categorize it. That's good.
Thanks, Kath from Red Prices. Okay, carry on.
Okay. Are we scrolling down a bit?
Yes, yeah.
Thank you. All right, so let's chat a bit about the survival ratio. So what exactly is it? So firstly, you have to have accurate and up-to-date financial records in order to do this, because, I mean, if you calculate a ratio and it's based on inaccurate information, you're going to go nowhere. So taking the financial position at the end of the prior month, you would look at the balance in the bank accounts. You'd add your receivables or debtors if they are collectible. You'd subtract the payables or the amounts owed, including the balances of any unspent restricted funds. So you would often, in accounting terms, call that maybe grants received in advance or deferred income. So those are those restricted funds that are attached to particular grant conditions that you can't just use on general expenditure. Then that equals what we call the balance of funds available. The next step would be to look at your financial commitments, your minimum monthly financial commitments, and that is like your legal commitments. So the amount per all the current contracts that your organization has with staff, employment contracts, suppliers, funders, and the South African Revenue Services. So those would be the minimum monthly financial commitments, what you actually have to pay for, even if you stop, procuring general things to run projects, say. Then you can calculate this thing called the survival ratio, which is the balance of funds available divided by the monthly commitments. So this survival ratio answers this question. Sorry, I'm just trying to scroll down my screen. Answers the question, how many months can the organization continue to pay the current monthly core costs, these committed costs? And probably the next question on your mind is, so what is the ideal benchmark for this? And I think we've often said it's probably at least 3 months, 6 months is better. The bigger the better. But like for your organization, there must be some minimum that it is comfortable with. And I would say no less than 3. Okay, so that's a key indicator.
Yeah.
Thanks, Brenda. I think that somebody who's obviously come in and who's not on silent. So if you could put your thing on mute. If I mute everybody, Brenda will go silent again. There's a nice little comment here from Liesel de Wet, who said one of the most valuable pillars in your organization is your finance manager. Yes, I agree. Who should keep a finger on the pulse and inform management weekly on the trends and the changes in financial status, especially cash flow. Thanks for that nice comment.
Yes. Yeah, a valuable asset, a finance manager.
Totally.
Okay. All right. So moving to the next slide. And then once you've exercised this adequate monitoring of your financial situation, there's obviously a chance now to consciously face these difficult decisions. And I'm not going to go through each of these in detail, but there's various things that you would do if you consider that perhaps you're in a financially poor situation and you're not going to survive beyond 3 months, for example. So there could be things like retrenchment or restructuring or closing down part of the organization or trying to access some kind of relief funding, trying to defer your liabilities, the amounts that you owe, making sure you're collecting all the amounts that are actually due to the organization, which you should do normally anyway, but it could become even more critical. So that's just some of the reactions you might have to your these key financial indicators. All right, thanks, Kathy. We can go to the next slide. All right, so now we're going to come on to sustainability reserves. If there's no more questions about the last section, Kathy.
No, we're going to do a poll. What is that poll?
Yes, a poll, please, on sustainability reserves. Okay, a simple question, I think. Does your organization have a sustainability reserve? Yes, no, or don't know. Okay, thank you. So, yeah, essentially 64% of the poll participants say yes, which is very encouraging. Yeah, that is fantastic. And then some 27% say no, and 11% don't know. So let's move on to talking about the sustainability reserves. And the reason that I've put this in here as being part of this new normal financial management is that now more than ever before, organizations are talking to us about their sustainability reserves and wanting to create one if they haven't got one already, and talking about how to manage or have a policy around them. So this has happened even more so recently. So what are the essential things to think about when dealing with this whole sustainability reserve concept? So the first thing would be one needs to focus on this conscious planning of the reserve. You can't just hope that somehow the money will accumulate and it'll turn into a reserve one day. You actually have to focus and you have to plan for it and budget for it. And the one thing that helps with this conscious planning is just further down in the slide, it talks about, or it raises the question, could a committee of dedicated people help? And this is something that an organization I know did. They just started, so I can't tell you the outcome, but this ensures that there's a focus on the strategy for the reserve and that there's actually people thinking about it. And it doesn't have to be a board committee, it could just be people who support the organization in some way as volunteers, for example, who have some skills and knowledge, or even just dedication towards building the reserve. All right, and what other things do we need to consider with the sustainability reserve? So the key question is how? How does the money go in? What are the income streams? So one would have to figure out how are we going to get money to build up the reserve? And of course, individual unrestricted donations is the one thing. Trading income is another. Interest income is another. Anything that's not restricted to usage in a particular way. So that's the how it goes in. And then how and why does the money go out? So one would need an approval process. And this is particularly important because if you just start unconsciously using up the reserve, it's going to be used up pretty quickly and without the kind of agreed, delegated idea of what it should be committed for. So ideally a board should approve the use of the sustainability reserve. And also one should, in the policies and procedures manual, document what the particular needs are that can be addressed by the sustainability reserve. So some organizations go for a high level kind of woolly idea, which is fine to you, that it could be a cash flow buffer when there's a temporary shortage of funds. But it could also be more specific things like your committed contracted costs, the ones we talked about a moment ago on the survival ratio. So the employment contracts, so the staff salaries, the rentals, or anything that's a legal commitment, that could be the type of need that the reserve can be used for. But one needs to kind of debate that and decide on what is a priority for the organization so that the reserve doesn't just go in any direction and get used up. The other important question is, what does the money do while it is there in the reserve? So one needs an investment policy. So the little picture on the right there, I don't know if any of you are similar age to me, but when I used to watch DuckTales, there was Scrooge McDuck with his giant vault full of money, and you can see him in the picture there diving into the coins and having fun with his vault of money. But clearly the organization can't do that. It needs to actively pursue some kind of investment strategy, which could include having a portion of the money in an investment account, a portion of it in a notice deposit account, and maybe even a portion of it in a money market account. But it's quite useful to get the advice of a financial advisor to decide how best to make that money work for the organization to generate higher returns. And the last point here is to do with disclosing in the annual financial statements the sustainability reserve. It can actually be used as a marketing tool, which is very nice. Some organizations can display their accumulated funds on their balance sheet in the financial statements, and people looking at it imagine that they're awash with cash. And one of the ways to address this is to create consciously the sustainability reserve and document in the financial statements and in other communications with stakeholders what the reserve is for, the reason behind it and what it is used for. And that will give potential funders and other stakeholders a good feeling that the organization is building on their own sustainability and strategically focusing on that, which makes them more comfortable with the organization.
Mm-hmm. Yeah, Brenda, there have been a couple of questions and comments on this. One person asked, Valerie asked, I've thought of a sustainability reserve as the survival ratio over 6 months. Is it different? So is the sustainability reserve the same as the survival ratio? How do they relate to each other?
So the sustainability reserve could be that balance of available funds. Yeah. So one often looks at how many months of operating costs are in the sustainability reserve. So that could be part of it, linked to the survival ratio, but it's also an availability of the reserve to cover those particular costs. So yeah, the reserve is not the sustainability ratio, but it can be used to calculate a sustainability indicator.
Yeah, yeah. Yeah, there's some very nice comments from Jacko, and I won't be able to read all of the things. And Kath also said, you know, obviously a lot of these people have already attended CMDS training and are very supportive of what you're saying, Brenda. But Lawrence from Zip Zap says, when showing too much reserve, we don't qualify for the rates rebate from the City of Cape Town. Yeah, so that's true. Yeah.
Oh,
so it's a bit of a balance.
Even if we call it something else.
Yeah.
Oh.
Yeah.
Sure. Interesting.
Yeah.
Okay. All right. So there's lots of comments, but no particular questions. Am I correct?
I think so, yeah.
Okay. So let's move on then.
I missed it because it's coming through quickly. Thanks. Carry on, Brenda.
All right. Thank you. Let's move on to the next slide then. All right, let's get started with this world of remote working and what impact it has on accounting records. There's a poll that should come up for you to answer, so we can hear a bit about how you're doing. And the poll question is, has your organization been able to keep its accounting records up to date during the various stages of lockdown? Oh, I'm so glad to see that it's 100% yes so far. Well done, everybody.
What is up to date, Brenda? What do you mean?
Well, ideally, within the month after the particular month. So like for right now, I mean, July would be, if you've done the July accounting records, you'd be up to date, approximately.
Okay. Anybody want to change the answer? Too late. Okay.
Yeah, so that's wonderful. Yeah. So 95% of organizations say yes, the others say no. We don't know why, but yeah, so I guess I'm going to be preaching to the converted here. So let's get on with the next slide. I'm just going to minimize that. Okay. So it seems like this remote working that we're probably still many of us are doing will be the way of the future, at least for now. I know that Google, as a large employer, they're going to be having their employees remote working until next July, and an organization that we know in Gauteng has cancelled their rental agreement, and for the next year they are without an office. And it seems like that could be a bit of a trend. So remote working has worked for a lot of people. And so this whole crisis has meant that, although we've often, I think this has been coming for a long time, so it's not a new trend, but it's really prompted people to finally take that final step towards accessing accounting records remotely. And it's no longer just a nice to have. Now that we're remote working, it is critical. And cloud accounting has been a way to do this inexpensively, where the records aren't sitting on your server, they're sitting on some other remote servers in the cloud. Because if you were retaining, if you were using your own servers for that, which is also another possibility, that can be a more expensive way because you'd have to buy the server and have an IT support person maintain it. So it can cost more. And this is an ideal opportunity for those who are still using paper-based records to go for electronic storage, whether it's a very specific dedicated to your organization cloud server, or whether it's just an app, I think you would call it an app, like Dropbox, where you could easily access that to store your records, and also something like Google Docs. The other thing that this electronic storage has done is it's made remote auditing possible, and this could actually reduce audit costs, the auditor not having to come over and go through those paper files, and they can also be given remote read-only access to the accounting system. So that could be pretty useful, and we always want to keep our audit costs low. So Kathy, if we just move on to the next slide, we can carry on. The one wonderful thing about a cloud-based accounting system is that some of them allow you to click on a transaction in the system, and that brings up the supporting documents behind that transaction. So there's no real filing system necessary. The document is just always there attached to the transaction. But if you don't have that kind of system, then be aware that the same rules apply for electronic filing as for paper filing, because you don't want anything that's uncertain or inefficient, and you need the same systematic approach to electronic filing. But what does that mean? It basically means that in your accounting records, there should be a reference that ties back to a reference number in the electronic filing, so that there's never any uncertainty about the match between the transaction and the documents. It's what I've called here a pure trail of evidence. There's never a question about the link between the two. So that's very important and will remain so no matter how you store your documents. Okay, thanks, Kathy. And we finished with that slide, I think. Yes.
Can I just ask a question? What kind of documents should be attached or retained for a transaction? And I'm thinking now electronically. Is it enough just to attach the invoice, or what should be attached?
So obviously an invoice for a payment is particularly important, but there's also a whole trail or a process that the organization would have followed to get to pay that invoice. So things like your purchase orders, if you do have those, quotes that you used in your competitive process to procure the item or the services, and proof of delivery if you are keeping those, which is a good idea. And so, yeah, the whole trail of supporting documents that leads to the invoice, which is then paid, should be part of those supporting documents supporting the transaction.
Okay, that's great. There's a question here from Zanelli from MSF. She says, do you have any advice on choosing, hold on, it's disappeared. Oh, the best cloud accounting software for NGOs, specific ones that you would recommend?
Yeah, well, there are quite a few cloud accounting options. The one that we use the most at the moment, well, actually there's two, I guess. The one is Ziyo, which is the one where you can attach the documents to every transaction. But I believe you can also do that with Sage Business Cloud Accounting, which is offered free based on certain conditions to non-profit organizations. So for the maybe smaller non-profit organization, those two seem to work very well.
Yeah. Thanks. And there's a question here as well from Valerie around referencing protocols. You know, how is it best to use a unique reference number, or can you, for example, use like the donor name, the dates, that kind of thing in your records?
I would always go with a unique reference number. I'm not sure if I understand the question exactly, but even if it's got some kind of code on it, like there should always be something attached that makes that code unique. Otherwise, there could be a question that could come up where no one is exactly sure what document relates to what.
Thanks, Brenda.
Okay, thank you, Kathy. We can move on to the next slide. Okay, so this also relates to remote working, but it's about protecting the control environment and fraud prevention. Let's get another poll, please. So the poll question is the current control environment of your organization different to the control environment before the lockdown?
I think we've got 86% have voted, so that's pretty good.
Great, thank you. So yeah, the bulk of you, 68%, say that the control environment is not different. So that's interesting. I actually would have expected more, but yeah, 25% say yes, and some don't know. In my experience, from what we've seen quite a lot of changes, and that is basically related to the remote working. So it comes from where people previously were manually signing pieces of paper and those kind of things, to now we can't actually share bits of paper between us. We have to find an electronic way of doing it. Right, but the key thing here in this new normal financial management is, even if our control environments are going to change, the one thing we mustn't do is allow them to descend into chaos, as this just invites those potential defrauders. So those boxing gloves there, those are really the way we need to defend that control environment, because the vultures are circling, and yeah, we really have to keep up the highest standards of internal control. The other point here is, if there is remote working, it creates that added factor where if something is out of sight, it's out of mind. So people who are working remotely may feel freer and more able to do things that they wouldn't do if they were sitting next to their boss. So yeah, that's something we must remember, to be very careful of that scenario. And nonprofits, although we always think that because it seems like it's a sector full of really good people, which it is, are not immune to heightened fraud and corruption. And every day in the news at the moment, we can see all that corruption going on. And it is going to, well, the corruption and the fraud is going to touch nonprofit organizations. And I was very privileged a few weeks ago to attend a CFO South Africa webinar, where they talked about, they had a panel and they talked about fraud, and there were a whole bunch of experts. The one was actually an convicted fraudster, an ex-prisoner. And what was interesting, and there were two big things that I learned from that webinar. And the one was about, within our organizations, increasing the ethics intelligence. So this means discussing with our staff, our volunteers, the ethical dilemmas that can arise in their course of work. So actually dealing with those kind of practical scenarios that could come up. So I was trying to think of an example of this, and the one that popped into mind was, is it ethical to, if the organization is somehow generating reward points with a credit card or something similar, who do those points belong to? Could that be a practical ethical dilemma of your organization? And the thing with ethics is that it's often a gray area, because you all have different viewpoints. And I remember a very good example. I went to an ethics lecture, and the lecturer said, if she saw a 100 Rand note lying on the ground in a shopping center, she would not pick up that 100 Rand, because that is unethical. And she would forbid her children from doing that. And I was quite stunned, because that sounded quite like something I might have done. I surely would pick up the money lying on the floor. And in fact, something like that happened to my family where we saw a 200 Rand note lying in a botanical garden. But you should have seen the debate that then arose, like what should you do with that 200 Rand note lying on the ground? The one child wanted to take it and buy sweets, and the rest of us thought we would put it in the donations box. So this, ethics is a gray area, and it's useful to apply it to practical circumstances and to talk about it so that people don't go off on their own ethical culture, as it were, but that they share the ethical culture of the organization. The other thing which I found quite useful, which is very simple, but I really liked it, was talking about the consequences of fraud openly. And the one thing that the ex-convict said one should talk about is prison and what it's like. Because if you're found out, which you usually are actually, you will end up in prison, and it is never, even a soft, low security prison is very bad. So that's a key consequence, and maybe people don't think about that. And the other key one, which I've personally seen in practice, is these ripples across organizations where your colleague of 15 years lies to your face in order to generate money for themselves through their fraudulent practices. And it turns out the person you thought they were is not that person. It's a horrible, traumatic experience. And also the families, the effect on the families of that person, well, especially if they go to prison. So just having those conversations is also quite helpful to enable people to get that into their minds and be less motivated to commit fraud. Okay, thanks, Kathy. I think we...
I just wanted to say there was a couple of comments from people. From Navani from AFSA, she said they've written up a specific SOP for more controls in the virtual working environment. So that's actually very, I wonder if they'd be prepared to share that with everybody, because that sounds really, really interesting. Navani, yes. maybe you can put yourself on, you can say something if you'd like. A couple of people also mentioned that they misunderstood the question. They said, of course, they've changed their environment. They didn't quite understand the question. So I think if we took the poll again, we might get slightly different answers.
Thank you, Kathy. Good morning, everybody. This is Navani from the AIDS Foundation of South Africa. I'm definitely happy to share our SOPs, but just to note, we are basically creating the path by walking it. And it's a working document, and as we see we need to tighten up certain things, we amend those SOPs, but I'm happy to share it. Just let me know who I email it to. Another colleague did ask for it, and I said email me, but definitely we learn from each other, and I'm happy to share as always. Thank you, Kathy.
Fantastic, Navani. Thanks, Brenda. Do you want me to move on?
Yes, please. All right, so carrying on with what we were saying is this change over to remote working requires a rework of paper approval. And the one question I had was, is email approval sufficient? So if you're replacing maybe some kind of paper signature or a signed form as an approval with an email, could it actually be the same? And the one thing I noticed when I was recently reviewing some approvals was does an email actually show what was approved? So it depends how you're looking at that email. If the email is like a scanned copy of the email that's stored, which is then used as evidence that there was approval, you can't actually see what documents are attached to the email. Of course, if the email was stored electronically, you would then be able to see what was attached to it. So that's a bit different. So you need to consider those tiny or seemingly tiny issues before considering that an email is sufficient approval. And the other thing is when there are these hackers into the email system, which is a business email compromise, I believe. And also if people set up accounts pretending to be the director of an organization, and they then use that to approve certain things, that could be a risk. And what I would suggest with that is that one never just accepts an email approval, like please pay this invoice. The organization must actually have a process in place from start to finish, which means that it's very difficult for someone just to like email pretending to be the director an invoice to the person who's responsible for loading payments and get that paid, because there's a whole process in place of people approving things and making sure that there's a validity to the whole process. And the last point there is, and I noticed someone in the chat earlier said they've moved to electronic signatures. And so it's very useful to consider electronic signatures and using a system to do this, because yeah, no matter what the situation, evidence remains important. And of course, the question that we must all ask ourselves, and which Navani already said they've done, is with the standard operating procedures, do the financial policies and procedures need to be updated? So we mustn't be like working in an environment where we suddenly no longer have documented procedures and people are a bit unsure what they should be doing. I mean, they're bound to go down the wrong road with that. So making sure that everyone's clear on what they should be doing in these remote working circumstances. Thank you, Kathy. Were there any questions?
No, there was just lots of gratitude for Navani and sharing the stuff. So.
Thanks, Navani. All right. Okay. So moving on then. All right. So just talking briefly about some of these external threats of fraud, which have grown recently. There's already been scams, which you may have seen, directed at non-profit organizations. So that whole NGO certificate debacle where people, well, in non-profits were told they could purchase an NGO certificate and therefore access international funding and that kind of thing. Once again, those vultures are circling and there will be a heightened level of scams. There's also definitely increasing phishing scams to target internet banking details. So yeah, don't be tempted to put in the organization's internet banking details in response to an email from somebody at SARS. There's also apparently an increase in organized crime targeting work from home people, which could include what I've already mentioned, this business email compromise, but also where people are not in close contact. It seems that they accept email instructions more readily. So one needs to be careful of that. And what can also happen is if people are working from home computers, it may put the data of the organization at risk because home computers are usually way less secured than a work computer that has, you know, like it regularly has updates and support and checking of an IT person, virus protection software and so on. There could be something sitting on that home computer that allows access to the organization's confidential data, including accounting records. Right, I've finished that slide, Kathy. Yep. No questions at this stage?
Nope.
Nope. All right. Well, then I think we must move on to compliance and what we think is emerging with compliance, the heightened scrutiny by SARS. We have I think it's our final poll question now. And the question is, how confident are you that your organization's tax returns are sending the correct message to SARS? I hope you can understand that question. But if not, I'll explain afterwards. Okay, almost finished. Looks like a lot of people are confident. 66%. 13% not confident and 21% have no idea, and I assume that's because those people are not involved in tax returns, income tax returns at all.
Which is fair enough.
And specifically, this is about income tax. Sorry, it should have been in the question, but this is about income tax returns. All right, so let's talk a bit about that. So what we heard years ago is that the tax exemption unit at SARS was going to build capacity to deal with PBOs. And that's been coming for a while now. And like in our kind of anecdotal experience, we've discovered that there's a number of organizations that have experienced this terrible heart attack moment when they get an assessment from SARS that is potentially huge. And, you know, all this time they were thinking we're a PBO, we're never going to have to pay tax. So that is a horrible shocker moment where your eyes almost pop out of your head. and you desperately try and find like a tax consultant to help you. So what we want to do to prevent those kind of moments is to avoid sending the wrong message to SARS about trading. So this is usually where the red flags arise. So the non-trading part is easy to disclose on a tax return, but the trading part is actually quite tricky, surprisingly so. And also SARS doesn't give good guidelines as to how to fill in an IT12EI tax return. So it's not surprising that people get a bit confused. So just to talk about a couple of examples where we've actually seen mistakes being made is firstly when income is disclosed incorrectly, and this relates to the trading income normally on the right-hand side of the IT12EI income tax return, which could relate to completing the wrong field, disclosing, and this is surprising perhaps, but disclosing all grant income as trading income, and also putting all your grant income as a basic exemption. So basically, like kind of messing up the trading section of the tax return, but that could cause SARS to then ask for the annual financial statements and dig deeper and perhaps come up with their own assessment. And the other, as I've said, if they ask for the annual financial statements, this is also where things, we've seen them being misrepresented, specifically on the income side. And what it tends to relate to is very experienced accountants, but who are not sector experienced. And yeah, so no way insulting them, but without that kind of experience of sector relevant tax exempt tax returns, or accounting, for example, they basically do not put things in the financial statements in the correct way. And just as an example, I've seen grants being disclosed as trading income simply because, I don't know, the people felt that you should call it a management fee. So one has to be careful and very careful about how things are disclosed in the financial statements in case SARS does take a look at that. And then they start raising questions, and there's a whole process that follows that can cause you a lot of pain, even if you get to the right outcome at the end. All right, thank you, Kathy. If there's no questions,
I think people are too shocked to ask the question.
But I see Yaku says, be aware that the tax exemption unit from SARS are scrutinizing tax returns with far more intensity. Thank you. Yes, that's what we're saying. So if you were careful in the past, be even more careful now.